Hey there, here's a trade, not necessarily something that we can do tomorrow, but something to keep an eye out on, put on your watch list, and uh, use it make the trade when it's appropriate. We're looking right here at a classic Head and Shoulders. The basic gist of it is we have a left shoulder, which I will call shoulder 1, S1. We have a we have a head, which is just head, and we have on the right side a second shoulder, which beyond just giving this a cute little name and also looking like a head and shoulders to some extent, we have to realize that this pattern right here is a swing failure. We have an uptrend going here, and then the stock failed to make a higher high, um, and therefore it made a swing failure right in that area. Now bear with me just as I draw a couple more trend lines, see if there's anything else that's significant in here. Okay, that was a significant trend line that was broken, but I'm going to X that out. I generally like to do, you can generally get a good bit of analysis by looking at the basics, but here I'll just make this a note. You can see a couple sell signals like this line here that I will change the color to, I'll change it to a nice orange. This line right here, we have 1 touch, 2 touch, 3 touch, and 4 touch right in this area. And I'll actually put a little circle around it. That's basically a warning signal. We would not take a sell signal directly from a trend line, ever. Yeah, never take a sell signal directly from a single trend line. So that's a warning signal right there. We have a second warning signal by this swing failure here. And we're waiting for the actual sell signal, and that's for the price to break below this level right here, which is roughly 523. So we can feel free to enter a short on a breakout. Say we're a little bit aggressive, but not too aggressive. So we'll say 2% lower than the current level that's at than the 522 level. So 522 divided by 100 and multiply that by 2. So we'll enter roughly 10 cents below the level of the actual breakout level, which is at $5.12. So what we can do, we will enter with a stop order, and this is a short position, bear in mind, at $5.12. And we'll put that right there. Our target is we trace the distance from the tip of the head, which is actually just a little bit higher than this. We're looking right there. And we extend it below. So we have a price target of roughly $3.50. So I'll write that there too. Target $3.50. And what we're going to do, we're going to enter the position. And even though Head and Shoulders are the most reliable bearish pattern, I don't like trading them for one reason. That's because there are often throwbacks, which means that, no, they're pullbacks, which means that after the breakout, the price pulls back to within the pattern. So see this line right here, and you can see the actual picture and print it out for yourself on the actual website. And I'm going to make this one a solid black line, and I'm going to make it a heavyweight too. This line right here is a key trend line in the Head and Shoulders formation. We have 1 touch on the head, 1 touch on the shoulder. What I expect to happen is this price to break out to the downside. So if I go to, say, the 60-day chart, no, actually, I'll go back to the 3-month chart or the 6-month chart, whatever's easier. There we go. I expect to see the price break out below this level around April 25th. And then I expect it to dip down just a little bit, bounce off of its, what moving average is this? This is the 200-day moving average. I fully expect it to bounce off the 200-day moving average, and then it will come back up into the pattern and touch this trend line. And then it will take its precipitous decline down to $3.50. So my future price movement looks something like this. It will move down to about here, and then it will, trend line. Then it will move to right there, and then it will quickly move down to $3.50. So this big black line right here, this is going to be our stop line. Since we have a potential point of touching at $5.50, we're going to put our stop at $5.50. Well, $5.51, and that's if it closes above it. And then we have our target of $3.50. So we can calculate our risk and reward. Our risk is 512 out off of $5.51, which gives us a $39 risk. And I always set up a complete strategy on these. I never will give you a blind stock pick, I promise. And our expected gain is $5.12. Oh, sorry. I always do this for 100 shares. Our risk is actually 39 cents per share. Sorry. But I generally trade in 100 share lots. Our expected gain is $5.12, sorry, minus $3.50, which is our target. So our reward equals $1.62 per share. Now, I'm going to quickly pause it as I get the exact probabilities and do the calculation like that. All right. For the Head and Shoulders, the percentage that actually meets the price target is 55%, according to the Bolkowski studies of the first decade of 2000. And so what we're going to do, we're going to take our reward, 1.62, multiply that by 55%, and we're going to, that gives us, sorry if I'm doing jargon, you don't need to listen to it, you just need to know the final number. So that number is 0.891, and then to calculate our probability adjusted risk, we take 0.39 times the opposite of 55%, which is 0.45, which gives us 0.1755 risk ratio. We divide the two, so 0.891 divided by 0.1755, and that gives us a probability adjusted risk to reward of 5.08, which I will put right here. $5.08, and that is above my minimum of 5. I do 5 because breakout trading tends to give you good probability, so 5 is conservative enough to be a favorable trade for me. So we have the strategy. Enter on a stop of $5.12, and then we will make our stop price a close above $5.51. Our target is $3.50. Make sure to keep your order at $3.50 because this company's earnings have been pretty good, which means that there's a good chance of it bouncing off. And take a look at this. Go to the 5-year chart. This stock used to be a very high price stock, even in the 10-year chart. Take a look. It started out nearly at $40. Other things to watch. We have an earnings report on May 1st. I believe that according to my technical analysis, that this is going to be a bad earnings report, which will drive the price down. But if I am wrong and it breaks through this trend line, feel free to take your loss at $5.51 and reverse your position, because that will give us then a target of $7.25, which we can also profit off of. So no matter what happens, there's no excuse not to make money off of this. All right, post any questions in the comments, and thank you for watching.